Assalamualaikum. Today we'll present about the group assignment for investment analysis FIN 4020. So our group consists of 5 students, 5 members, which are Ahmad Faris, Abra, Muhammad Aiman, Muhammad Faiz, and Abdul Rahman. So let's proceed with the first slide for our companies. So in these slides, we will explain about the background analysis of our companies. The first one is the Mastercard Incorporated. The short form is MA. For its the industry is in financial, and then for the market capitalization, the figure is 199.398 billion, and the major competitors we choose is the HSBC Holding PLC. And then the next one is the Orange SA. The short form is ORAN, Oran. The industry is technology. For the market capitalization is 46.174 billion, and the major competitors we choose is the DTEGY, which is the German telecom company. Okay, for our third company, we choose Netflix Incorporation. The short form is NFLX, which is among the famous channel. It is in the consumer industry, and then the market capitalization is 141.201 billion, and we choose the competitor is the 21st Century Fox. And for our fourth company, the famous tobacco, which is the British American Tobacco. The short form is BTI. It is in the consumer for its industry. The market capitalization is 105.835 billion, and we decided to choose its competitors, PepsiCo Incorporation, which is known as Pepsi. So the last one is American Electric Power. The short form is AEP. It is in the utilities industry. The market capitalization is 31.817 billion, and the competitors is Korea Electric Power Corporation, KEP.
Okay, for the next part, which is ratio analysis, we will compare our company with its competitor. For the first company, which is Mastercard, its competitor has been long in the industry with 150 years, but Mastercard only 39 years. But in terms of earning per share, Mastercard come with higher earning per share with $3.65 per share, compared to the HSBC PLC, which is only $2.4 per share. In terms of dividend payout ratio, HSBC got a higher dividend payout ratio, which approximately 106.25%. Analyst price also, Mastercard have a higher analyst price with 204.64 compared to the HSBC, which is only 57. In terms of market price, the Mastercard company have a higher market price compared to the HSBC. For the next company, with another industry, our chosen company, which is American Electric Power versus Korean Electric Power. For the experience, American Electric Power have a long time in the industry with 112 years compared to the Korean Electric Power, which is only 57 years. American Electric Power also have a higher earning per share compared to the Korean Electric Power with $3.88 per share. But in terms of dividend payout ratio, American Electric Power also have the highest dividend payout ratio with 67.22%. In terms of price, analyst price, American Electric Power also have the high price with 64.61 compared to the Korean Electric Power with 16.26. The market price also American Electric Power have the higher one, which 64.62 compared to the Korea Electric Power with 16.26. Okay, for the next company, which is Orange versus Dish Telecom, which is DTAG. In terms of experience, these two company are not different so much, which Orange has been in the industry for the 28 years, and DTAG in the industry for the 23 years. But in terms of earning per share, DTAG have the higher earning per share compared to the Orange with 0.9, but the Orange is 0.26. Next, for in terms of dividend payout ratio, Orange SA have higher percentage for the dividend payout ratio compared to the DTEGY with 106.070%. In terms of the price, analyst price and the market price, Orange have the higher price compared to the DTAG, which 0.16 and 16.99 respectively. Next, for the British American Tobacco, we choose the PepsiCo for its competitor, as we stated earlier. These two company also did not differ so much in term of experience, but in term of earning per share, British American Tobacco have have a higher earning per share with 25.78, but the PepsiCo only have $3.4 per share. But this is different with the dividend payout ratio. With the PepsiCo have 93.43% dividend payout ratio compared to the British American Tobacco, which is only 11.98%. In terms of the price, which is analyst price and the market price, PepsiCo have high analyst price with the $111.33 compared to the British American Tobacco, which is only $83. For the market price, same as analyst price, which is PepsiCo have the higher market price with 97.51 compared to the British American Tobacco, which is only $51.06. Okay, for the last company in our portfolio, which is Netflix, we choose to compare it with 21st Century Fox. In terms of experience, 21st Century Fox has been in the industry for the 96 years, but the Netflix can be known as a new in this industry by the 21 years experience. In the earning per share also, 21st Century have high earning per share compared to the Netflix, with 21st Century Fox have $2.13 earning per share compared to the Netflix, which is only 1.25. For the next part, which is dividend payout ratio, Netflix have 0% dividend payout ratio compared to the 21st Century Fox, which has been long in the industry, come with the dividend payout ratio about 16.51%. But in terms of price, Netflix have the higher price compared to the 21st Century Fox, which is analyzed come with the price about 340.20 dollar compared to the 21st Century Fox, which is only $41.33. But the real price, the market price of this Netflix is $324.18 compared to the 21st Century Fox, which is only $37.27.
Okay, for the company strength and opportunity. As for the Mastercard, its strength is they have sponsor major events such as World Cup, Euro, and UEFA Champions League. And its of opportunity is a digital currency is increasing with technology advancement. So many company are using investing in their company. Okay, for the American Electric Power, their strength is they are investing in a greener energy. So, so they are trying to decrease the air pollution. So this is good for them, and its opportunity is growing population of US, contributing to the increasing demand for power. Okay, the next company is Orange. Uh, they has a huge number of they has a huge customer base, because every country has this has Orange have invest in many big company, big country. Even in Malaysia, we can see this company products. And for the opportunity, they should scope in African country for their expansion. Okay, so the next company is British American Tobacco. They have a strong market position because they have has more than 100 years experience in this market. And the opportunity is a rising popularity of smokeless tobacco. And the last company, which is Netflix, their strength is they have a very competitive price. uh, com- and the opportunity is they have a powerful they are powerful branding, because every countries in every countries are using Netflix for their entertainment, for their
20 days. So let's move on to the technical analysis. From the graph, we can see Mastercard technical analysis is moving with a upward trend, and the 20 days simple moving average, which is the purple color, also upward trend. We can see from the first period until the end of the 2017, um, mostly there is 5 to 6 5 to 6 5 to 6 signal, which is the silver moving average. The price is close above the simple moving average. As for the other company, which is American Electric Power, the the price movement is fluctuate. For the first period, from April until July 2015, we can see only five five signal, which is the price closing above the simple moving average. When the price is closing above the simple moving average, the investor can do is to buy the stock. And if the simple moving average, the price is below the simple moving average, the investor must sell their stock. The same goes to the British American Tobacco, which is they have a quite stable price movement. Also the simple moving average, and also the Netflix also have a upward trend, which is about 5 to 3 5 to 10 price that above the simple moving average. And also the price that below simple moving average about 8 6 to 8 signal. And also for the orange have 3 period, which is the first period show a downward trend, next period show a upward trend, and then decrease back with a decrease back in 2017 before they continue to increase back. From this price movement, the simple moving average will follow the price movement, and we can see there is many signal point which the investor can do as buy and sells for their stocks. That's all from me.
Okay, as for the firm analysis, they have four types, which is average return, standard deviation, critical value, and beta. So as you can see in return, the higher is better. So the highest return is the Netflix company, followed by Mastercard, and then British American Tobacco, American Electric Power, and Orange. And then for the standard deviation, the lower the percentage is better. So as we can see, American Electric Power has the lowest standard deviation, followed by Mastercard, and then Netflix, British American Tobacco, and Orange, which the highest standard deviation. So for the second last part, for the critical value, as we can see, Orange has the highest critical value, which is 48.46, followed by American Electric Power, British American Tobacco, and Netflix, and the lowest Mastercard, 5.64. And lastly, for the beta, the lower the ratio is the better. So American Electric Power is the lowest beta, which is 0.39, followed by Orange, and then Mastercard. Lastly, the highest beta, which is the famous entertainment media, which is Netflix. Okay, for the second last part, which is the portfolio evaluation, we use the sharp sharp formula. So both for both company and competitor portfolio, it shows negative ratio, which is for the company portfolio negative 0.10, and then for the competitor portfolio negative 0.33. So for the comment for the sharp result, both portfolio is a negative ratio. It indicates that the return is lower than risk, which is bad for the both investment. So as for the Trenor, both portfolio shows a negative sign, negative ratio. So it shows that both portfolio do not generate return. And lastly, for the Jensen, company portfolio shows a positive ratio, while the competitor portfolio shows a negative sign. So for our comment, for both our portfolio, company portfolio is better than competitor portfolio, which they have the ability to earn proper return for each risk.
So let's move on to the portfolio analysis. As we can see, the return on portfolio is only 0.37%, and the risk of portfolio is higher than the return, which is 2.2%. This is doesn't good for our portfolio analysis. And as we can see for the from the table of covariance, all of them shows a positive relationship between the stocks. The relationship, if the if we have positive relationship, it means that we have a high risk. But of course, if the high risk is can be determined based on the value. If the value is nearest to to 1, it means we have uh, a very risky portfolio, because uh, the stock tend to move direct tend to move tend to move each other together. But if the covariant have a negative relationship, which is the inverse relationship, this is good because when the company the stock, when one stock is increasing and the other stock will be decreasing. This is what we mean by inverse relationship. So if we have a high value of inverse relationship, this will reduce the risk of portfolio. I think that's all. Dah.
For the last part, in our presentation, which is a recommendation. Okay. I would not encourage the audience to acquire if their focus is on return and risk, because both portfolio company and competitors have risks that higher than return. However, if the investors conclude the management of the company, we think that it is good to use the company portfolio, since most of them are blue chip stock. Okay. The second one is from the analysis, we found that a portfolio with different industries does not give much more returns. Thus, we recommend investors to actually consider to fill a portfolio with the same industries. Of course, when you still need to find companies with a good return and have a inverse relationship between the stock in your portfolio. Okay, the last one is when the covariant and correlation have an inverse relationship, or the return is higher than the risk, it will impact the Sharp, Jensen and Treno measure, which later it will have a positive value that is good for investor. Okay, that's all from us. Thank you.